It's your girl, Shirley Nichols, and you're on with Mortgage Money with Shirley. And today is Friday. It is Friday, April 22nd, and we are on episode 22 because it's April 22. No, but no. I'm your girl. I am your host for this podcast, Shirley Nichols, on my personal Facebook page, Shirley Nichols, and then on my business Facebook page, it's Mortgage Money with Shirley. So tune in, tell all your friends, family, co-workers, relatives, tell everybody to tune in and watch this. And if you're not watching it live right now, you can always catch the replay, because it's still going to be jam-packed with lots of information and tools and tips that you can use for when you're trying to buy a house or refinance a house. Again, it's episode 22, and we are talking about qualifying and closing quickly. Closing quickly. Yes. That is still a thing that we're doing right now. Yes. I know, when I got started, and let me give you all my NMLS number. I always tend to forget to give you my NMLS number. Is to let you know how we're certified to do and licensed to do what it is that I do. So my NMLS number, 105989. Again, I'm your host, Shirley Nichols. I'm a mortgage broker with Clear Sky Mortgage and Realty here in Los Angeles. And I've been doing this for over 28 years, so I think I kind of know what it is I'm talking about. So again, sit back, relax. We're on twice a month on a Friday here, 9:30 California time, twice a month. It's typically the first and third Fridays of each month that you'll see me right here on the podcast live in the Morris Media Studios. So if you have any questions right now, live on air, you can call in. What? What you say, Shirley? You can call in right now because we are live right now in the Morris Media Studios here in Los Angeles. That call-in number, area code 323-815-4204, 323-815-4204. If you need to call in and have questions. If not, you can always leave your questions in the comments section of Facebook, because again, I'm streaming live on Facebook and on YouTube. My YouTube channel is Shirley Nichols. So again, you can find me anywhere, Spotify, Apple Music. Tune in, because I'm telling you, I got 28 years worth of information that I'm a jam-pack right here in 30 minutes. So again, today's episode 22, we are talking about qualifying and closing quickly. Now, I know some of you are thinking, what? You can close quickly? Well, because like I said, 28 years ago, or over 20 years ago, over 15 years ago, over 10 years even, it used to be where we would tell you, if you're buying a house, if you're signing a purchase contract, make sure your close of escrow is 30 days, 45 days, 60 days. Yeah, we used to tell you back in the day, make sure you have a close of escrow date 60 days from the time you sign your purchase contract. And then as the years started going by, we started to move that 60-day closing to a 45-day closing. And when you got to a 45-day closing, we were like, yes! Everybody, every party involved, the seller, the seller's agent, the buyer, the buyer's agent, everybody was so happy that we could close in 45 days, right? And then it started creeping on down to 30-day closings. Yes. So 30-day closing went on and on for years. 30-day closing. Get your close of escrow date 30 days from now, right? You sign it on April 1. You close on, maybe May 1, maybe April 30th if you're lucky, right? So I'm here to tell you today, on Friday, April the 22nd, 2022. How come I haven't seen any of those posts though, 2022? Anyway, but no, seriously. It is a thing right now to close in 15 days, 20 days maybe. Yeah. So we're starting to shorten those close of escrow days. We're starting to shorten the days that it would take you to get into your house, your new house that you buy, right? You don't have to necessarily have a 30-day closing any longer. We're closing loans, believe it or not. And you can check my social media pages, Instagram, Money Mortgage with Shirley. like and subscribe, follow my YouTube channel, my personal Facebook page, Shirley Nichols, my business page on Facebook, Mortgage Money with Shirley. You can check my social media. You'll see I'm closing loans in 4 days, 6 days, from start to finish. We are. And why am I telling you this? Well, here is a real life scenario that happened this week. I mean, it's not anything abnormal, but because it just happened literally 2 days ago, I thought I'd share it with you. So 2 days ago, I have buyers that I helped them buy their first house, and we refinanced and done things over the years. And now they're ready to buy their second house, right? Their second house. They're going to sell their first house that they bought 5 years ago. Okay. 5 years ago, they bought a home. I helped them get into $325,000. And these are, like I said, real live true facts. You can look them up on my social media page. 2 days ago, okay, they had been contemplating, oh my gosh, I got to sell my house. I really want to take advantage of the Los Angeles County market. Plug. I have to say that because we're here in Los Angeles, but these properties have been appreciating, and it's just, the values are so good right now. They really are, and they're just getting better. But nonetheless, 2 days ago, right? They had been contemplating selling their house, and they finally got an offer on their house. Now, mind you, like I said, 5 years ago, they bought their first home that I helped them get into for $325,000. Here it is 5 years later in LA County. They're selling that $325,000 home they bought for $555,000. Yeah. And they're not even in what we call a very, very prime location, because you know how they tell you in real estate, location, 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 right? They're not even in the mecca of the highest equity producing market of California, right? They're closer to the desert. Bought their home for $325,000, and they're selling 5 years later for, what'd you say, Shirley? $555,000. They've amassed over $200,000 in equity in less than barely 5 years. So they're selling their house. 2 days ago, they had an offer accepted on their house, and they had their offer accepted on the purchase of a new property. Now, 5 years, a lot can happen. Well, one, they got $200,000 worth of cash now. And then one of the husband, his job in the same field that he's been in promoted him. So now he's making a boatload of more money after 5 years. So now, okay, they got their offer accepted on their new home of $800,000+. Yes, they did. So they went from a $300,000 house to 5 years later, an $800,000 house. Why do you ask? Or how is the better question. How is because now they've got about $200,000 in cash that they can put toward this $800,000 house. Yeah. And you're thinking, but aren't interest rates high right now, Shirley? If you think they are, shame on you. Shame on you if you think the interest rates are high. They're probably where they should be. And I only say that because, like I said, I got into this business 28 years ago where we were selling money in the double digits. I tell that story all the time because I think it's fascinating. But I want to drive home a point for all of you out there who are thinking, rates are too high, rates are too high. No. If you come from where I come from 28 years ago, you'd understand. Rates, we were selling money in 11, 12, 13% rates. And they were still buying and selling and refinancing their homes. So I say that to say, this client 2 days ago, and this story is real fascinating. I want you to listen. Come close. This story is fascinating. So they're buying this new $800,000 house. They're going to put 20% down, so their mortgage payment is not so terribly high. It's higher than what they were paying with the $300,000 house, but you're buying an $800,000 house. You're buying more than twice the property that you had 5 years ago, okay? So yeah, your payment's going to be higher, okay? But they're going to try to minimize the shock of this payment being a lot higher by putting 20% down. Now, that's not always the rule. That's not always the case, and nor do you have to put 20% down on an $800,000 house. You could do a government loan, FHA, and you can go 3.5% down, or you could go 10%, 5%. So it doesn't always. I want to dispel that myth of, oh my gosh, I need 20% down. But they're putting 20% down because, as I said, they've got over $200,000 to utilize toward this $800,000 house, right? Okay. And 20% of $800,000, it's $160, so they'll still have some cash left over to buy their new furniture or whatever have you. But nonetheless, I said this, and the reason why I'm trying to drive home this point is about this closing quickly episode that we're on, episode 22. 2 days ago, they signed a purchase contract and they said, oh, Shirley, do I do a 45-day escrow? And I said, what? Why are we doing 45 days, guys? We're into the 30-day. We're beyond 30 days. Now we're doing lower than that. We're at 15 and 20. I can sign a purchase contract for 15 or 20 days. You sure could. Now, I don't know how your sellers, are wanting, how quickly they're wanting to sell. But most sellers that I've worked with, they want their money quickly. Just like my buyers who are selling their property and getting $200,000 plus in their bank accounts, they want to sell and close quickly. So most sellers do want to do that. So now they're buying this house. And I said, hey, to make your offer even more enticing to the seller, because I don't know if you guys have heard, but it's really a seller's market out here right now. Still to this day, yes. All throughout the pandemic, it was a seller's market, and it's still a seller's market. And there's lots of offers and bids on houses, and if you want your bid to look enticing and more attractive than the next person's offer, tell them you can close in about 10 to 15 days. Yes. Tell them you can close quickly. Tell them that you can close sooner than 30 days. Matter of fact, you could close sooner than 20 days. So I said, hey guys, you don't have to sign a 30-year contract with them, a 30-day contract with them. You can sign, maybe if you want, 15 days. Oh! So 2 days ago, here we go. 2 days ago, right? They get their offer accepted. And for whatever reason, the sellers were not quite ready. I don't know the whole full story, but they did a 30-day escrow. But 2 days ago, we submitted their file to the underwriter and said, oh, guess what? We don't need an appraisal. What'd you say, Shirley? We don't need an appraisal. What'd you say? We don't have to do an appraisal on this property because we've pulled our data bank, we've pulled comparables, and we found out this house is exactly what they're asking for, but you're going to walk in with a little bit of more equity to start with. Because see, what the sellers accepted from my clients was $800 and some change. But what the comps showed was well over that $800 and some change. So my new buyers are going to be getting equity when they walk into the door. Yeah, but because we don't need an appraisal, for all of you all who don't know, that when you're doing a purchase contract and you're when you're buying a house, typically you'll have what they call an appraisal contingency. And that appraisal contingency sometimes says something like, oh, we'll need 13 to 17 days of an appraisal contingency. Now, what does that mean? Well, just back in the day, like I said, it kind of meant that, oh, we have 13 or 17 days to get this appraisal ordered and in and completed. And if for some reason the house is not worth what you're asking for, we can do a little bit of negotiation at that point. So it was normally about a 13 to 17-day contingency back in the day. Yeah. But guess what? It is now 2022. And for the last year more, I would say pretty much the entire pandemic, we have been getting what you call an appraisal waiver. Or more technically, for you technical brokers and real estate agents out there, we've been getting PIWs, property inspection waivers. Property inspection waiver is huge because that cuts down on that 13 to 17 day contingency I was telling you about, right? It cuts it down, and quite frankly, it kind of removes it because now the underwriter, the lender, has said, Don't worry about getting an appraiser out to the property, scheduling the property, and paying your money up front. Typically here in California, $600 to $650 for an appraisal. Don't worry about paying that fee. Don't worry about getting scheduled with an appraiser. We can remove all of that and we'll call this house exactly the price that you are asking for, Mr. Seller. We'll say that's the value because we've done our research, right? And that can happen. So that cuts down on the amount of time you need to close. That's why I said closing quickly, 10 to 15 days. Are you kidding me? Yes. So 2 days ago, we get the approval, no appraisal, and we've got the most fantastic escrow company on the case. The sellers typically get to choose who they want you to work with title and escrow. They typically get to pick out who that person is or that company is. Well, in this case, my buyer's agent, she got to use her company that she's familiar with. And when I tell you that title and escrow company has already sent over pretty much all of the documents that we need, I mean, they were on it in those 2 days. We get title and escrow. We get appraisal waived. Your loan is approved. Guess what's happening, folks? Guess what's happening? This is day number 3. Guess what we're doing on Monday? Anybody want to take a guess what we're doing on Monday? We're going to docs. We're going to docs. Because, guys, like I said, it is no longer the case where it's a 60-day closing, a 45-day closing, a 30-day closing. You could really start making your offer more enticing, more attractive than the next buyer when you tell them, I can close in about 10 days. Everybody can get their monies in about 10 days. Yeah. And it's because there are lots and lots of properties out here in California that we will do PIWs or property inspection waivers, basically no appraisal, no fee out of the buyer's pocket. Now, we say that for the purchase market, but did you know that is also for the refinance market? And let me go back a little tick. If you're buying a house, if you're purchasing a property right now, you should call me. I have lenders who are doing up to $600 appraisal credits. So if you do have to do an appraisal and you're buying a property, okay, if you're buying a home, buying a house, and you have to do an appraisal that we for some reason can't get that appraisal waiver, and I will tell you, it's not the norm to get an appraisal waiver on a purchase, okay? It is really not the norm. I'm talking about 45% of all purchase deals, get an appraisal waiver. Most of them, 60% or so will need an appraisal, okay? So don't think that it's the norm to get an appraisal waiver, but it sure is worth the try to get one, don't you think? Yeah. So if you still have to get an appraisal and you're buying and you're purchasing a home, then I have lenders that will offer the $600 credit so that you don't have to come out of your pocket, buyer. You don't have to come out of your pocket for that appraisal, okay? So call me about that and we'll talk about that because we do have lenders that will offer that. Now, if you're refinancing your house, now this was definitely huge all throughout the pandemic. If you are refinancing your house, most of the properties that we refinanced here in California did not need an appraisal. They didn't. We have data bank and research and information that we can pull together. If you say your house is worth, XYZ, and you're not, saying, oh, my house is worth $2 million. Every homeowner in America thinks their house is worth $2 million, right? If you're not that one that's going around saying, oh, my house is worth $2 million when it's really worth $600,000, if you're really truthful and realistic and honest with yourself, you'd probably not have to do an appraisal. Because if you say to me, hey, Shirley, I think my house, I've done some stuff to it, but not really a whole lot that's going to matter. Yeah, I think it's worth $600,000. And I put in your address and I pull the comps and I look at the data bank. And if it really is $600,000, you'd probably not need an appraisal. Yeah. For a refinance, that was going on strong for 2 years and still going on strong to this day. We've been getting appraisal waivers left and right, right and left. I mean, we've been getting appraisal waivers, people, if you're refinancing. Yeah. So don't be afraid of that. But that goes along with why I said we can close quickly. We really can. Yes. So take advantage of what I'm saying. Take advantage of this market. If you're buying, take advantage of letting your seller know that, hey, I can probably close this thing in about 10 to 15 days. I don't need the full 30. So start talking to your agents. Start talking to these sellers, okay? Now, let's kind of focus on a refinance story. I told you the fantastic story about my buyers that are going to be closing or signing their loan papers Monday, maybe Tuesday of next week. 5-day closings, guys. I mean, and now let's talk about this, okay? Because this is important. You cannot call me and say, hey, Shirley, I'd like to close in 5-6 days. Help me out. And I say, fantastic, let's go. Let's take your application. I'm going to pull your credit. And when I pull your credit on Monday, right? When I pull your credit on Monday and I say to you, oh, you qualify for XYZ. I need the 2 and 2. And if you all watch my previous podcast, I told you what that 2 and 2 is, right? If I say to you, I need the 2, 2, and 2, that means 2 pay stubs, 2 bank statements, and 2 W-2s. Now, we really don't need 2 and 2 any longer. See, these guidelines and these happenings are getting better and better. I told you all before on several podcasts, lenders want to lend to you. They really do. They don't want to decline your loan. They want to lend to you because that's how they stay in business. If they don't lend to you, what are they going to do? They're going to have to shut down. No. So the lenders want to lend to you. They want to make these loans to you. But you, client, need to make sure you're ready. You know how they say sometimes be careful what you pray for? This is a true story, guys. So Monday you call me, hey, Shirley, I like to refinance and get closed like 5 to 6 days. I say, okay, let's go. I pull your credit, right? And then I say to you, I need your 2, 2, and 2. And like I said, we really don't need it, but I'm going to ask for it just in the event because we're going to stay what? Proactive. We're going to stay in front of the ball. We're going to stay in front of the underwriter. We're going to always have what we need. We're going to ask for this stuff up front. So I'm going to say, I'm pulling your credit Monday morning, and I want your 2, 2, and 2 by this afternoon. I want the 2 pay stubs, the 2 bank statements, and the 2 W-2s, right? Notice I did not say tax returns, okay? I will ask for tax returns if you're self-employed or if you own multiple properties, okay? So typically I'm not asking for tax returns from the W-2 wage earner, okay? Typically I'm not. But if you own multiple properties, like most of my clients do, if you're self-employed, like a lot of my clients are, then I'm going to ask you for 2 years tax returns. So it's still the 2, 2, and 2, but it might be 2 years tax returns. And if you pay yourself a pay stub, 2 pay stubs and 2 bank statements, okay? So it's still going to be the 2, 2, and 2, okay? Just know this. If you call me and you want to close in 5 to 6 days. What'd you say, Shirley? Know this, okay? We take your application on Monday morning. We pull your credit, get you ready. And then I say, give me your 2, 2, and 2. Send it over. Because what I'm going to do is pull your credit, call you back. Congratulations. Guess what you qualify for? Blah, 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 blah. I'm going to lock in your interest rate. You're going to give me your stuff and I'm going to send it to the underwriter. Guess what's going to happen tomorrow? The underwriter is going to finish underwriting your loan and they're going to say, here's the approval and you don't need an appraisal. I'm going to have my title company on the phone. Hey, give me this, 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 and this. All that happens on Tuesday. Wednesday, we are what? We're sending out your pre-closing papers, or what we like to call your CD or your closing disclosure. You got 3 days to review those papers. And then guess what we're doing on the following Monday? Signing paperwork. And you wonder, is this true? Check my social media pages. I post it all the time. We are closing in 6 days or less most of the time. If you, client, are careful in what you're asking me for. If you're asking to close in 5 or 6 days, I'm going to try to make that happen. But you have to be realistic, organized, and ready to go. If you're not realistic, organized, and ready to go, don't call me about closing in 5 to 6 days because it's going to take longer. But if you're ready, organized, and truthful for what you're trying to do, we can get you closed probably in 5 to 6 days. Okay? And it happens all the time. So I was going to bring up this scenario about a client who did a cash out refinance. This happened, a couple weeks ago because we just closed them a couple weeks ago. So we started talking to my client, and what is this month? April. So this is April. So we started, and the reason why I have to ask myself what month is this, because we actually made our initial first phone calls back at the end of March. Now remember, I said we can really get you closed in about 5 to 6 days. We started this conversation, the first conversation at the end of March. And I said, hi, we can get you closed real fast. Oh, okay, Shirley. Let me ask my wife. Okay. When you start doing these extra conversations and doing these extra things before you call me, guess what? We're not closing in 5 to 6 days. No, we're not. And so I already knew where this conversation was going. Like I said, I've been doing this for over 28 years, guys. There's not a whole lot that surprises me anymore. It's just now, mind you, there's new things that happen in a different version, right? New clients, new scenarios, and it's just a different version. So, like I said, there's not a whole lot of stuff that has happened or that will happen or that can happen or that does happen that I haven't seen some sort of version of it. Okay. So immediately it's the end of March. Husband calls, hey, Shirley, hi, we can close real fast. Oh, okay. Let me call my wife and That was the end of March. Okay. Now the first week of April, when I still don't have your 2, 2, and 2, I call. Hello, it's me, Shirley. Did you want to close real fast? Oh, I was, my wife, she's waiting on her paycheck stub. Okay, but you knew this like last week because remember we talked the last week of March and I said, I need your 2, 2, and 2. So last week, March, your wife, the first week of April, is still waiting on a paycheck stub. I said, okay, all right, you keep waiting. So now it's the second week of April. And he asked, the husband says, when are we going to close, Shirley? Excuse me? Have you submitted your 2, 2, and 2 that I asked you for back in March? So again, guys, I strongly profess to you, we really can't close. But when I ask you on Monday morning to get me your 2, 2, and 2 by Monday afternoon, that's really what I mean. Yeah, surprise. I really do mean get me your 2, 2, and 2 in that same day, and I can make it happen. I can get you close. Nonetheless, it's the second week of April. We're just now getting the 2, 2, and 2 from the husband and the wife, because mind you, it wasn't really just the wife, and it never really is. Okay, I'm a little biased, I'm sorry, but it really wasn't just the wife. He was missing his driver's license. Yeah, newsflash, we do need your ID on all of these transactions. So outside of the 2, 2, and 2, throw in the ID. We need your ID. So we really weren't waiting just on the wife. We were waiting on his ID. And these are things, guys, these are things that we can get along the way, yes, but I like to have a full package when I submit it to the underwriter so that they don't have to ask me for anything. You know, the basic thing that they always ask me for on my conditions, you get your pre-approval from the underwriter, and it normally says, hey, Shirley, congratulations to your client. Here's what I need. And the here's what I need is their list of conditions. And because what you're actually getting from the underwriter is a conditional pre-approval, right? Or a conditional approval. And that conditional are if you supply all these conditions on this needs list, then you will get your final approval. But right now, what we have is a conditional approval or a conditional pre-approval. So we get the conditional approval and it says, this is what we need. And so typically on my conditions list, there's typically about 3, maybe 4 items that are needed. 3, maybe 4. One of them typically is we need what's called a credit supplement. Credit supplement is just to make sure that you've made your mortgage payment in the month that we're closing or the month prior, typically the month prior. Okay. So one of my 3 or 4 conditions, one, we'll need the credit sub. Hey, check, make sure they've got their mortgages paid on time for the prior month, typically because we've pulled their credit in the middle of the month or something like that, and it hasn't rated for that the monthly mortgage has been paid or whatever. So credit sup is typically one of those conditions that I need. Real easy. Another condition is, update the homeowner's insurance. We have to update the homeowner's insurance. That's more internal stuff. That's 2 of like the 3 or 4 conditions I need. The third one is typically I need the wire instructions from your escrow company. Where do we wire these refinance monies to? That's typically a condition. And maybe the last condition might be I need an ID. So the conditions really aren't that difficult to maneuver or that difficult to fulfill when I submit these packages to the underwriter, because I try to ask for everything up front. Yeah. So when I ask for the 2, 2, and 2, that's exactly what I mean. And then I need your ID and your homeowner's insurance, right? And your mortgage billing statement. So it's not really a whole lot of stuff, but when I say I need, that's what I need. And so that stuff that I said is so that I can make sure that my conditional approval is really small so that we can close quickly, right? You don't want the underwriter to have to keep going back and back and back on a file, because then they start looking for stuff that really isn't there, making our jobs harder. So I ask you to submit the package in detail, but some clients will do this. Hold on a second, I need to give you my ID. And they take like another 2 or 3 days. And that's fine, because typically I'm going to go ahead and work behind the scenes and go ahead and submit the file with what I got anyways, just to keep the file moving. But don't, husband, blame it on your wife when it's you too. You're the culprit as well. So needless to say, about this refinance, we get everything submitted the second week of April. And guess what? We don't need an appraisal. We don't need an appraisal. So title work is already in. I'm just waiting on the husband's ID. We get that in by the end of second week of April. And guess what? We're closing. So like I said, it's the 22nd of April. We really could have had this closed like the 15th of April or before. It's just that when I made the initial phone call, somebody didn't have their 2, 2, and 2. Be organized, be ready, and be truthful about what you want to do. And I promise you, we can close quickly. So that's what I mean by qualifying and executing quickly, because it really can happen. Now, there's bumps and hiccups along the way. And I will say to the clients out there that are trying to refinance right now, I talked about this my last podcast 2 Fridays ago. I talked about the forbearance and deferment. Catch that podcast on a replay. It's episode 21. Like I said, just the last episode we did, episode 21, forbearance or deferment. Catch that episode. It's really detailed and jam-packed with some information. If you have a forbearance or a deferment, you can still refinance or buy a house. Okay? So don't be shy about that. I'm going to touch real quickly on reverse mortgages. Guys, guess what? Update on the guidelines. Reverse mortgages, the minimum age is 55 now. So real quick, reverse mortgage, instead of the mortgage balance going down, it goes up. That's the reverse, because right now, most of you are in a forward mortgage balance, basically a forward balance mortgage where your balance is going down and not going up like the reverse. It goes in the reverse, right? So, reverse mortgage typically are for a special client. I close, maybe 8 to 10 reverse mortgages a year, because like I said, they're built for more of a special type of a client. You do go through education, counseling before you do your reverse mortgage, because like I said, it really is a specialty for you to have a reverse mortgage. Not everyone wants to do one. I am pro reverse mortgage, believe it or not. I'm in this business. I know that sounds kind of crazy. I'm pro reverse mortgage for a certain client. Okay. And I talk very heavily and intently to the clients that I do close. Like I said, about 8 to 10 of them a year. I talk very intently to them because, like I said, it's a special project. It's a special program for the right client. It's a need for it. And that's why I'm pro reverse mortgage, because there is a need for those type of programs for that type of client. Okay. But the minimum age is now 55. Yes. So if you'd like to hear more about reverse mortgages and that you are now 55 or 56, then call me and we can talk a little bit more detailed and deeply about these reverse mortgages. FICO scores. Yes. Minimum FICO scores with the A paper lender. What'd you say, Shirley? With an A paper lender. Minimum FICO scores have dropped to 620. So if you're looking to get the premier interest rates or move quickly with your closing, call me, because we do have lenders that are now doing a 620 FICO score. Now, were they doing 620s before? Sure, but that's with a different lender whose rates may be a little higher, whose costs may be a little higher. Because yes, you can still qualify in the 500 range with credit scores. Yeah, you can still have a 580 and still get qualified for a mortgage. The type of mortgage you will have is, still you can do a conventional or FHA, VA. However, your rates and your down payments will be a little different. Okay? They'll be a little different than the person who has a 680 and you've got a 580. So like I said, there are programs for everyone out there. Don't be bashful. Don't be shy. You need to call and talk about it and ask questions. Okay? Because you own a property and you want to do something. A lot of the times there are things that we can do. Now, if you don't have a bunch of mortgage rates, right now, the minimum mortgage rates that you can have is typically about 2, and we can still get you closed. Okay. So that means you could have had 2 30-day lates on your mortgage. This is huge, guys. This is huge. Understand what I'm saying. This is the year 2022. You could have missed a mortgage payment in January, right? And then turned around and missed a mortgage payment in March. And what I mean by missing them, the payments are typically due the first of every month. So January 1 rolls around and you don't get that January 1 payment in until February 1. So now you got a 30-day late, right? You have a bona fide 30-day late, okay? Because you didn't make it on January 1 and you made it February 1, okay? So now you've got a 1 times 30. That's what we call it in the mortgage world, in the lending world. It is a 1 times 30. However, you could also have missed that payment in March 1 and did not pay it until April 1. Now you have another 30-day late. So you could have had a 30-day late in January and a 30-day late in March. You've got 2 30-day lates and we can still get you closed. Yeah. So like I said, there's quite a few programs for people out there, but you just gotta ask the questions. Now, because you have 2 30-day lates, are you gonna have the same interest rate as someone who doesn't have any mortgage lates? Probably not. But you can still do your refinance or buy a home. We'll just talk about what that interest rate is going to look like, okay? And like I said, right now, you're talking to someone who's been in the business for over 28 years. Rates are not high. Now, I say that because, again, I come from the double-digit era, right? I come from 12, 11, 13% rates. So when I see that rates are averaging about 5%, 5.125 on 30-year fixed right now, I'm thinking, yeah, this is normal. We've done this before, and we have. And when we go back, and we will, when we go back to rates being under 4%, and we will, when we go back, call me. We'll refinance you. Yeah, if you want, There's nothing wrong with a refinance. And I still to this day get questions like, hey, Shirley, I just bought my house 3 months ago. Can I refinance? Hey, Shirley, I just did a refinance 3 days ago. Can I do a refinance? So again, I will say this. Most lenders want you to wait until you've made 6 payments. Okay. When you buy a house, when you refinance your property, most lenders want you to make at least 6 payments before you refinance. Okay. So just keep that in mind. Is it the must? Is it the gospel that you have to do that? No, but they'd like to see 6 payments before they look at refinancing you, because what they don't want you to do is get into the habit of living off of your home. What'd you say, Shirley? Living off of your home. Okay. So just know that, and then in the grand scheme of things, rates don't typically dive down or plummet down in a quick 6 payments. They typically don't. In this market, during the pandemic was a little bit different. It was really extremely different, because rates you saw under 3%, I'm talking 2%, 2.25%. You saw these rates during the pandemic. And like I said, that's abnormal. So when that kind of thing happens and rates shoot back up instantly, like in 3 days, it's just because it really wasn't that normal to have rates under 3%. So now that rates are at 5%, kind of where they are supposed to be, that's kind of normal. Now, don't beat me up. Don't call me with hate mail and all that, but do give me a call if you have any other questions and concerns and tips and tools that I can give to you. I'd love to share this stuff with you. Like I said, I've been doing this for 28 years. I am Shirley Nichols, and this is Mortgage Money with Shirley, my podcast. I do 2 Fridays every month, normally the first and third Fridays of each month at 9:30 here California time. And like I said, there's just so much information that if you miss it, catch my replay on YouTube. Subscribe, and like my YouTube channel. It's Shirley Nichols, and I'm on most all social media platforms. You can catch me there. But tune in, and I'm your girl, Shirley Nichols. It's Mortgage Money with Shirley. Have a great weekend, and I'll see you next Friday or 2 Fridays. Take care.